Welcome back to The Explainer, everyone. Today, we are unpacking what I'm calling the $45 billion paradox. We're looking inside Rocket Lab's unprecedented rise. And look, this isn't just your standard story about spreadsheets and quarterly earnings calls. No, it's about massive ambition, intense engineering discipline, and honestly, a mind-bending contradiction right at the very heart of the commercial space race. So let's jump straight in.
$45 billion. Seriously, let that number sink in for a second. That is Rocket Lab's approximate new market capitalization. To put that into perspective, their stock surged a massive 30% in a single evening right after their Q1 2026 earnings release. We're talking about investors rapidly throwing an extra $10 billion onto the company's valuation in just a matter of hours. Now, this is the kind of aggressive, hyper-confident market move you usually only see when a company completely rewrites the rules of an industry. But the true reason behind this massive valuation is actually kind of paradoxical.
Which brings us to a really crucial question. Why on earth is the market heavily rewarding a rocket that hasn't even flown yet? Because the truth is, the single largest driver of this $45 billion valuation is a massive new rocket called Neutron. And right now, it's still sitting on the ground. The market is heavily, almost aggressively, pricing in the success of a launch vehicle that's literally still in development. Now, you know the aerospace industry. It's notoriously difficult. Rockets routinely explode on the pad. So this level of preemptive market trust is almost entirely unheard of. To figure out why investors are making this massive bet, we need to look at what Rocket Lab is actually pulling off right now.
Okay, let's dive into this. The first quarter of 2026 revealed a whopping 64% jump in revenue compared to last year. Hitting a record $200 million is impressive enough, but what makes it wild is that they completely smashed Wall Street estimates. And get this, those were estimates that analysts had already bumped up twice in the past 3 months. Plus, their gross margin climbed to over 38%, and their net losses shrank significantly. Basically, the financials are showing a company that's accelerating across absolutely every single segment of its business.
But you might be wondering, where exactly is all that money coming from? I mean, you'd naturally assume a rocket company makes most of its cash from, well, launching rockets, right? Well, actually, scratch that. Over 2/3 of their revenue, nearly $137 million, actually comes from space systems. This is the division that builds satellites and spacecraft components. So the absolutely crucial point here is that Rocket Lab isn't just a launch company. They are a vertically integrated space infrastructure provider. They aren't just driving the delivery truck to space, they're manufacturing the cargo itself.
Now, while that space systems division is absolutely booming, their launch foundation is built on a rock-solid track record. Their smaller rocket, the Electron, has completed over 60 missions with a success rate exceeding 95%. It's officially the most frequently launched orbital small rocket in the entire world. The engineering discipline required to pull off that level of reliability with a small rocket is just staggering. And honestly, this right here is the bedrock of investor confidence. The market is betting that the exact same engineering culture that made the little Electron so incredibly reliable can seamlessly scale up to their next, much larger project. And as you'd expect, that reliability translates directly into phenomenal sales momentum. In just the first quarter alone, Rocket Lab sold more launches than in the entire previous year. We are talking 31 new contracts for Electron and its suborbital variant, HASTE. On top of that, 5 new contracts for that unlaunched Neutron rocket. They even secured a record-breaking bulk purchase from a customer who, for now, remains undisclosed. But what I find truly fascinating is a $30 million contract with Anduril Industries for 3 hypersonic test flights. Now, Anduril is using its own private capital here, not government money. This signals a massive, brand-new private sector demand for hypersonic testing infrastructure, something that previously only lived deep inside classified government programs. Now, what's really interesting about this slide is the real secret weapon driving this massive valuation. It's a single, monumental number, a $2.2 billion backlog. Think about that. Just a year ago, this number sat at roughly $1.1 billion. It literally doubled in 12 months. This is the exact metric that explains why investors were so eager to throw an extra $10 billion onto the company's market cap in a single night. It proves that the demand for what Rocket Lab is building isn't just a theoretical pipe dream, it's locked in, it's signed, and it is waiting to be fulfilled.
So, let's break down exactly who makes up this massive backlog. The biggest single piece of the pie is an $816 million prime contract for the Space Force's Space Development Agency, building a missile defense constellation.
You've also got the National Reconnaissance Office, NASA, and allied militaries, clients that require the absolute highest levels of security clearance. And over on the commercial side, major players like Globalstar are in the mix. What you really should take away from this is the profound, almost unprecedented trust placed in Rocket Lab. Remember, fundamentally, this is a non-American company, with its roots in New Zealand, yet the highest levels of the American defense establishment are trusting them with their most highly classified satellite programs. That is incredibly rare.
To really understand their overall market strategy, we kind of have to talk about the giant in the room, SpaceX. Now, SpaceX launched Falcon 9 more than 100 times in 2025, compared to Rocket Lab's 21 launches. But the difference in their backlogs is super telling. SpaceX's backlog is heavily self-referential. It's mostly dominated by launching their own Starlink satellites. In stark contrast, Rocket Lab's $2.2 billion backlog is almost entirely made up of diverse third-party government and commercial clients. For customers who desperately want an alternative to SpaceX, or maybe specifically need a launch provider not controlled by Elon Musk, Rocket Lab has perfectly positioned itself as the premier, trusted alternative.
But here's the thing. To truly compete for those massive third-party contracts, we're talking data centers, communications networks, giant surveillance constellations, Rocket Lab is going to need a bigger boat. Enter Neutron. This is a reusable, medium-lift launch vehicle designed to carry 13,000 kilograms straight to low Earth orbit. It is explicitly designed to go toe-to-toe with SpaceX's Falcon 9. The current race to get hardware into orbit means there's simply way more demand right now than there are rockets to serve it. This market is definitely not a zero-sum game, and Neutron is exactly the vehicle Rocket Lab intends to use to capture this booming demand.
However, designing a rocket of this sheer magnitude is incredibly difficult. And this timeline right here, this is the major risk factor that the entire $45 billion valuation hinges on. Neutron's original target launch was late 2024. Then that slipped to mid-2025. And now the current target is later this year, in 2026. Normally, Wall Street punishes delays like this absolutely severely. But each of Rocket Lab's delays has come with highly transparent, plausible technical explanations. CEO Peter Beck points out that first flight hardware integration is already underway and the Archimedes engine qualification is progressing well. And because of their flawless track record with that smaller Electron rocket, investors are just showing immense, frankly unprecedented patience as this timeline shifts.
You know, to really appreciate the scale of this corporate machine today, it's vital to remember exactly where it all started. Back in 2006, CEO Peter Beck drew Rocket Lab's logo on a literal napkin during a flight back to New Zealand. We're talking about a founder who skipped university entirely, did an apprenticeship at a tools manufacturer, and literally built a steam-powered rocket bicycle before deciding, hey, I think I'll start an orbital launch company. 20 years later, that little napkin sketch has evolved into a $45 billion defense and commercial titan. It just beautifully humanizes the whole story, doesn't it? It really underscores the sheer grit behind all this high-end engineering.
So our core takeaway for today's explainer can be summed up pretty simply. The backlog says the customers are ready. The government, the military, and the vast private sector are actively betting billions of dollars on Rocket Lab right now. They aren't just hoping for a successful small launch company. They're heavily investing in Rocket Lab becoming a vertically integrated, full-spectrum space infrastructure provider. The market is totally convinced that this massive backlog will convert to real revenue, and that these 50% plus growth rates are here to stay. Which ultimately leaves us with one final, totally pivotal question. Is the rocket ready? Over the years, Peter Beck has delivered on virtually every commitment he's ever made to his investors and his highly classified clients. But this is the one that matters most. Neutron's very first flight, targeted for later this year, will be the ultimate test. It'll determine if this $45 billion valuation is a brilliant early bet or just a massive leap of faith that came up short. The customers are ready. The money is definitely waiting. Now, we just have to wait and see if the rocket will fly. Thank you so much for joining me for this explainer. I hope this deep dive helped clear up the incredible paradox behind Rocket Lab's unprecedented rise. See you next time.